Good morning. It's already February 1st. It's tariff day. We're putting 25% tariffs on Canada and Mexico, 10% on China, part of the Trump policy. Actually, we saw some market action this week. March corn had a downside reversal for the week, down 5 cents. And that's a downside reversal on that weekly chart. March soybeans down 14. Surprisingly, wheat is the most export dependent crop, but March Chicago wheat up 16 cents for the week. March Minneapolis up 20, despite that tariff threat. March crude oil down 213. There obviously are some backdoor negotiations going on in Ukraine. Trump is trying to end that war. You could see the policy. He's really pulling back from, trying to conquer the world and trying to actually secure the United States. First, in the tariff deal with Canada and Mexico. Actually, we have a kind of a Marxist socialist leaders in both Mexico and Canada right now, and China in the Panama Canal. Excuse me, running the Panama Canal. So April gold up $29 this week, a new all-time historic high in gold. That is the one commodity that is still showing inflationary pressures. Actually, not, a spec trade might be selling gold at the old highs. We actually had a downside reversal on Friday. The dollar, though, continues to gain up 0.972. That is concerning. And actually, you think about this America first and these tariffs on countries that are net exporters to the United States, that is going to continue to strengthen the dollar. That probably might be a more important factor affecting grains, because when that dollar gains, it makes grains more expensive everywhere in the world, not just those countries that are tariffed. And that could, in the end, be a much more important factor than tariffs to a country here or there. Corn market, you can see these charts. Wow, corn rallied almost up to the yearly highs, got to nearly $5 on the March contract, and actually, rallied into the week to new highs, new recent highs, almost the highs for the year. And then, unfortunately, the reversal down on Thursday and Friday. Actually, we did catch a sale on Wednesday, basically almost near the yearly highs, selling 20% of old crop corn at 507 on the May futures, locking in the futures, waiting for that basis. Of course, it's bad in most areas of the country. Actually, also selling a new crop December corn at 467, basically near the highs, the recent highs as well. We did make some corn sales. Really, corn, the only crop that had decent prices after this pretty significant rally, basically a dollar rally from $4 to $5 on the old crop corn. That's really the only sale we've done recently. I wanted to, show you the weekly chart in the corn. Actually, you've got the new recent highs and then a close lower on the week. This is not, if you look at these weekly charts, this is not a significant downside reversal. I think, though, we could lose, even go down and do a double bottom in corn should those tariffs have to linger very long. Biggest impact in corn, of course, is in Mexico, where we export a fair amount of corn to Mexico. Actually, the Canadian deal, we get a lot of cattle, hogs, imported in from Canada, especially here in, the central Midwest. We also import a lot of canola. We import a lot of durum. And with tariffs on Canada, actually, that's going to help some U.S. farmers. Beef prices, of course, at all-time highs right now. And canola and durum prices could see a significant jump. Most of that will probably be on the basis side, because actually you think about canola, that's traded in Canada. So you got to kind of think about what the impacts of these things are. Both of those countries net exporters to the United States. Actually, when the United States puts tariffs, that retaliatory tariffs by Canada and Mexico, the United States is still going to win. And I think what is going to happen is the same thing that happened last time. If these tariffs have to stay on for a long time, Trump is just going to compensate farmers. Farmers voted for him overwhelmingly. His common sense approach to government, I think, just makes sense to anybody with common sense. So anyway, you've got weekly downside reversal in corn. I think that's going to provide some pressure. That's why we wanted to make some sales this week. And actually, the market gave us the opportunity. Thought it was a good place to start. As far as weather in South America, you still have the next week considerable dryness in the southern part of South America, particularly Argentina. You look at the temperature forecast the coming week, departure from normal, a lot of red here in Argentina, even into southern Brazil, and even, as far as central Brazil. And as temperature-wise, a lot of red, much above normal temperatures in Argentina. That drought continues. We did have about a week of rain in the past week or 10 days where they had almost normal rainfall, but this is a drought that's lingering. We're going to trim that Argentine crop. Week 2, we're trying to throw some rain back into Argentina and cool temperatures a little bit. I'm not sure. They've kind of been forecasting that the entire year, and that drought continues to linger. So that is actually supportive of grains. And actually, if you look at these grains, especially wheat, soybeans, all these charts, there has been support. Soybeans, we've got higher highs, higher lows. We're kind of sitting on the trend line right now. But of course, this tariff threat, 10% tariffs on China, is going to have an impact on soybeans. We could very well go down and test these lows if they linger a long time. But I think some of that money, like it was with China, that they collect billions of dollars in tariffs, they can easily transfer some of that to farmers to offset that. And I think that's exactly what we're going to see. But I don't think this is going to be a long-term situation. A more important thing will be the dollar value, I think, because that affects all countries' expenses to the United States. This is the Chicago wheat chart. You can see we're getting higher highs and higher lows in this chart as well. Seeing some strength actually even this week in wheat, but recent weakness on Thursday and Friday. Actually, that is very interesting. And can we bottom the wheat market? Wheat, the most export-dependent crop. Of course, let's talk about spring wheat. We do get imports from Canada, but you see higher highs, higher lows. The market wants to bottom, wants to go up here, but of course, any tariff impact is going to be, immediate in the marketplace. U.S. dollar index. This is what I talked about. The dollar index has rallied from 100 in October to over 110. You can see the recent high. We dropped down, but now we have Trump doing what he said he would do. And actually, those tariffs are going to be strengthen that dollar because, of course, the United States is becoming close to bankruptcy, 36 billion in debt. Interest rates, those interest rates have jacked up 3 times more. Actually, a lot of that debt is going to expire and going to renew at a 3 times the interest rate as it rolls forward. And so the United States is in big trouble financially, but by cutting government, getting rid, hopefully, of the whole Justice Department and most of Health and Human Services, all the woke people out of government, that'll clean up a lot of expense, but tariffs will collect money for the U.S. Countries we're tariffing are those that are net exporters to the United States. When they stay on, we will probably gain economically, and the dollar will gain. That is not good for agriculture, though, because it's going to make it more difficult to export, not just to Mexico and Canada or China if they have retaliatory tariffs, but everywhere in the world. That is a big, big deal. And the dollar strength, of course, could be our Achilles heel, if you want to put it that way, in agriculture. As far as the other outside markets, crude oil, I talked about that. We rallied sharply here at the end of the year because Ukraine cut off Russian natural gas to all of Europe, and at the end of December, not renewing their $1 billion cash cow, collecting money for letting Russia run natural gas under their ground into other countries in Europe. But Trump continues to threaten to end that war, and you could see already we've gone from 80 down nearly 80 to $72. We've been losing value, and it's clear Trump is not holding back anymore. Something like a Russia hoax that the liars in the mainstream media administered last term that crippled his presidency. He's not shy about doing things because the mainstream media, nobody watches it. They're all firing all their high priced people because they're getting no revenue. Nobody cares what they say. You lie too often, cry wolf too often, and lie to American people that nobody cares what you say anymore. So we also have a interesting development in gold. New historical all-time highs in gold made on Friday. It's a very interesting development. Actually, from a speculative standpoint, I don't see how gold can continue unilaterally when all the other commodities, even crude oil, is going down hard recently. So actually, from a spec standpoint, I think selling gold at this point, and especially when the dollar is rising, selling gold at the old highs and risking it, for a few days, especially with a downside reversal Friday. Not a significant daily downside reversal if you look at this, new highs and then closing lower. But, if you want to mess around in markets, I just don't see how gold can continue to rally. So I'm going to finish up this week with just kind of an update. I talked about this harvesting ECO, and I'm not going to go through it. In the United States, we have a 65% subsidy on it. You sell 20% calls on corn, you get basically all that premium back, and you can look at this more in depth. Corn now, we sold that at 467, trading 461, 470 calls, 35 cents. You get on 20%, as 180 bushel yield, sell 36 bushels. I don't know if corn is going to run above 505 this year. That looks like resistance. Pays for the ECO. If you look at the break even, I think in corn, trading at 461 now as we start February, setting those revenue price coverages for crop insurance this next month. Corn is at 461. I think we can make money, or at least break even at corn there for most producers. And I think we can take all the red out of it. Wheat, we're still rally 20 cents this week. 641, we're getting closer. We probably need to get that number closer to 7 to run into break even, and soybeans probably closer to $11. But things are looking better. Our ARC price support is going to provide some, it's pretty high this year. It's going to provide a lot of coverage. Most people in their risk management buy 75% enterprise insurance, and if that's at break even like corn, they still have 25% at risk for yield and price. If you add the ARC this year, you're going to probably get another 10%. Most people are going to need to sign up for that if you have base acres. Add the ECO, you're basically only have 6% at risk. Sell those call options at a price 7%, instead of max price 7% higher. You actually have 101% minimum. You have that 95% minimum revenue guarantee. And all you got to do is do some good marketing. We already started corn at 467 on 15% of the crop. So that's very interesting. We could probably break even on corn and maybe lock in some profit if we get some marketing opportunities here. But obviously, we haven't done that. Interesting developments. We're going to go through a little transition period here. Hopefully we don't ruin our revenue price in February, but these tariffs coming on February 1 may have an impact. We could see a long-term pressure. I don't know why Mexico and Canada wouldn't agree. Yeah, we'll stop fentanyl. Yeah, we'll do everything we can to stop the immigration and cooperate, because they're going to lose if these tariffs hang on. If they retaliate, they're a net exporter to the United States. And of course, that's a calculation. Trump is no dummy. Common sense government returns was his message at his inauguration. And he's no dummy. He's going to win that war. Whether it stays on or comes off, he's going to get a net benefit to America. But he's going to have to divert some of that tariff money like he did in China, because farmers will be hurt. Probably the worst thing is this stronger dollar, because it's impacting not only our trade with China, Mexico, and Canada, but everywhere in the world, everything we export. We export half of our wheat, 40% of our soybeans, and about 1/6 to 1/7 of our corn. So interesting developments. Made some sales in corn. Actually, corn is going to be a crop that's probably going to attract acreage. 3 million, many in the trade say. I think by the time we get done planting in June, it might be closer to 5 if the price situation stays the same. We're going to take acres from wheat and soybeans to get there. So that's going to improve the outlook for wheat and soybeans in the last half of this year. Maybe we'll get an opportunity to lock a profit there. Lot to think about and contemplate. It'll be fun to see the reaction this coming week to these tariffs and see how these leaders, the Mexican leader, kind of a Marxist socialist, and of course Trudeau is even probably worse in Canada. So many people in Canada would probably like to be a part of the 51st state of the United States. So it's actually kind of comical to follow some of the mainstream news and especially the coverage of it. But should be an interesting week. Hope you have a great weekend and good marketing.